Juliet Sue, who's a partner at New Tribe Capital. We have Alessia Baumgartner, who's a VP of Ecosystems at DWF. And last but not least, we have Rifad. I cannot pronounce your last name, so apologies. But the CEO of OKX in MENA. Great. Well, thank you for having us. Very excited to be here. We're going to be talking about building a sustainable and growing Web3 industry. So my name is Patrick O'Kane. I'm a general partner at Borderless Capital. Borderless, we're a US-based blockchain-focused investment firm. We run early stage and late stage VC funds and also liquid strategies. And today we're going to be covering quite a bit in the time that we have, but I want to talk about general sustainability across the ecosystem, all the factors that go into it. We'll touch on regulatory matters, region-specific matters, and we'll see where the conversation goes. But excited to chat, and why don't we kick it off if you guys just want to go down the line and provide a little more background about your what you're doing at your respective companies.
Hi, everyone. Thank you so much for having me. I'm super excited to be here. My name is Alessia. I'm VP Ecosystems at DWF Labs, which means I overlook all of our portfolio companies, including our market-making clients and investments that we've done over the last 3 years. DWF, as mentioned, we're a market maker and also a digital asset investment firm. We have integrated over 60 exchanges, and right now we have over 800 portfolio companies. So even though I've never launched a company myself, I've seen some do's and don'ts over the last 3 years with our portfolio. So I'm happy to share some insights and have a fruitful conversation with you guys. Thanks.
Great, thank you.
Hello, everyone. My name is Juliet. I'm a fund partner and ecosystem lead in New Tribe Capital. So we are one of the earliest and probably the most active VCs who started here in Web3 space in Dubai 4 years back. So we've been operating for over 4 years, and we've got a portfolio of 200 plus projects within this period of time. And we always keep in the kind of, very I call it more of the boutique approach to get stick to the team and to support the projects long term. That's why we're still active, and we love the region and we love the progress that's happening here.
Thank you. And I'm Rifad Mahasna, CEO of OKX in the Middle East and North Africa region. OKX, if you're familiar, we focus on obviously the centralized exchange part, but we've got a lot of focus on other sides of the industry, including institutional business, Web3 and wallets, DEX, part of our product suite. And we've just launched our regulated entity in the UAE in October, and we're very proud of that move, and we're continuously building now on growing that business in the UAE.
Great. So what I want to start out with to set the stage for everyone is go down the line and discuss where we're at, your views on where we're at in the current state of the Web3 ecosystem, where we're at in the cycle. Are we in the growth phase, consolidation, and just to set the stage real quick, high level, where do you think we're at?
Desperate phase. No, just kidding. I mean, we cannot not talk about what happened over the last week. The liquidations that happened is apparently more than it has been shared. I saw Ben, the CEO of Bybit, saying that in Bybit itself, they had over 2 billion worth of liquidation. So imagine in the whole industry how much it was. Of course, it's a really sensitive time. It can be not that fun, especially for founders that have tokens launched. But, these moments has happened many times already in the industry in the past. A lot of people were comparing to the FTX times, but it's not as bad as that time, for sure not. But right now, the issue is that there are many tokens being launched and not enough liquidity in the market. So whenever a new token launches, it becomes a hype, and then the next day or the following week when another token launches, the liquidity gets drained and goes to this new token, and then we continue with this wave and not that good looking patterns in the chart, right? Especially when Trump got launched, we saw the whole liquidity getting drained from all the ecosystems and going straight to the Trump token, and then Melania happened, and we don't talk about it now. But yeah, it's an interesting time for sure. My suggestion is to not look so much into the chart and continue building. Majority of our portfolio companies are just focusing on building. They are taking this time to build and accumulate positions as well. So that's my view as of now.
Wonderful. Juliet?
So see, the topic we discussed today is sustainability, right? Like, and that was a really right question, right? Like usually people look at the market from the cycles perspective and from like narratives perspective, and cycles and narratives, and it's not something that is sustainable, right? Like, in order to have your position in the market, you need to look, as was just mentioned, in something which is sustainable. And then you already have like a product and you have technology and you have the overall like a long-term vision. You don't really care if the market goes up, if the market goes down, because for some projects, if you launch on the bear market, you have not that much competition and you got better positions at the exchanges, better offers from the exchanges, and overall you just like you cover the whole market. That's what we're looking at. And as like also mentioned, the situation that we had a few days back, one of my friends, he said like, you know, I don't really know if it's the last chance to buy or if it's the last chance to sell, so I'd rather stay aside. So that's the thing that I believe everyone is like keeping in mind these days. Talking about my personal opinion, as we see, it's overall in terms of macroeconomy, in terms of narratives, in terms of the retail money inflow and institutional money inflow in the market, we should be consolidating the market right now. It's still consolidation stage. So, and the highest thing we're gonna see like probably within the next 3 months, and that's gonna be the overall market high. But I can't predict the market because as we see now, it's becoming more of the political game. And that's why there are like multiple like a black swan events and multiple political things that might happen that might affect the market. So you can have the overall positive vision, but you should consider that there might be some black swan event happening which will affect the market overall. So that's why, like, yeah, lots of people, they prefer to observe from the side.
Got it. Rifat?
Yeah, I'd cover, I think that a lot of it has been covered, so I'll add my views on it. I think we're still early. I think there is, looking at it, and certainly from our perspective, the amount of capital that went in, this is a unique industry where a lot of the capital that went in first was retail capital, unlike other industries. I think there's a lot of institutional capital that remains on the sidelines, a huge percentage of that. And I think once that comes into market, then you start talking about consolidation and maturity. But in general, if we look at the state of, if I'll take, for example, Bitcoin. A few years ago, we're discussing Bitcoin and saying people were questioning Bitcoin. And the discourse was completely different. Today, the discourse about Bitcoin, if you're following the recent media, is about whether countries are going to adopt Bitcoin as a reserve currency or which countries are going to use Bitcoin in their mainstream economy. So that took years. So I think in more on the Web3 side, we're still early. There's still going to be a lot of, there is momentum, but it's going to take time for it to become as mainstream as the rest of the industry. But we're definitely on the right track. But yeah, that's my take.
I want to get your perspective on that. So in the industry, we've been saying that institutions are coming in a very meaningful way for how many years? I tend to think that now it's actually happening in a more meaningful way. What are you seeing from your seat at OKX in terms of institutional adoption? And is this a different environment than we've seen in the past? Because we've all talked about institutions coming in. Do you see that this time is a little bit different than before?
Absolutely. I think we've, like I mentioned earlier, since we've launched our business in the UAE, a regulated business, the type of conversations with institutional clients have changed. a lot of ones where we thought they will never touch digital assets or crypto in general started reaching out proactively, saying, okay, how does this regulation, how can I adopt your regulated entity? How can I invest with that? And I think that's a lot of, one of their key concerns was to have a regulatory certainty. And once you've got more and more regulated exchanges, that opens the door for institutions. The other thing is transparency. Institutions are corporations. They have their own internal risk teams, internal audit teams. They want to know as much information about you. And the more you can provide them, the more comfortable they are to start investing on platforms. So definitely the momentum is there. And by all means, the impression that we have right now has changed drastically, if I say over like the last 2 years. Today, more and more inquiries are coming in, like how do we invest? What do we invest in? What kind of assets do we invest in? A lot of these questions are on the institutions themselves, but at least that discourse is happening today.
Great. So Juliet, you initially mentioned we were talking about the cycles, and we can't really think about that and just continue to move forward. What specifically do you look for when you're investing in companies? Are there any key factors that you look for sustainable projects? And how do we avoid the sort of boom and bust narrative cycles to make sure that this ecosystem continues to grow at a very steady clip?
So the best case scenario is to invest in somebody and try to avoid them who is trying to avoid the market speculation. Because we just got a discussion with my friend, right? Like talking about, giving you an example, AI agents, which are super popular nowadays, and everyone is trying to build another AI agent. So people are not creative enough because they see the successful use cases. Like for example, we invested in virtuals. And not that many people know that virtuals, they were not virtuals. And there was a project that launched, I won't name it, but then they renamed, they made their rebranding, they got into the new narrative, which is AI agent, and now they are very successful, right? And what people are doing, they're looking, okay, this narrative is very successful, let me build some AI agent platform. Oh, there is a trading agent which is super successful, so let me build another trading agent. So because they believe that somebody already succeed, we will do the same way, we will do success as well. So, but overall, I believe you should think out of the box. Out of the box is just explore what kind of niches are uncovered and be bold and be like, kind of rebellious enough to cover that niche and to provide, kind of deliver sustainable technology to the customers, to the users that you are focused on. So for us, like, I might say that my favorite investments were made in the worst bear market. And that time, I remember we signed SAFE, which is equity investment, which is not that much understandable and for Web3 investors, and some kind of token warrant. And the token warrant means that probably we will get some tokens sometimes for some valuation. Nobody knows what valuation, and maybe within 10 years. I just promise maybe I will come with some tokens. So, but the reason I signed those agreements and made those investments is just because you get on call and you see the founder and you believe, okay, this is the rock star founder, and like he should make it. I don't care what kind of market narratives it's going to be and what kind of cycle it's going to be, because if he understands the technology, he will be able to adjust. The same actually as virtuals did, right? Because that time we invested in the team. Unfortunately, they couldn't launch successfully, but they were smart enough to get adjusted to the market narratives. And actually, like, I can tell another example. We invested in projects in multiple verticals. And now I speak to the founders, like we invested 2 years back, and they are like, oh, we do AI agents. I'm like, sorry. We invested in social application, yes, but now we are focused on the AI agents. Because they want to get more traction, but overall, it's a speculative element that unfortunately exists in the market. And in order to escape the speculating element and to play against the market in a positive manner, you need to choose something which you find sustainable in terms of team and in terms of tech and in terms of following the proper go-to-market strategy.
Great. So, Alessia, beyond capital, what can VCs and investment firms do, and what are you doing to help grow the industry, make it more sustainable, and what are some best practices that you've seen from your seat? And then also for some of the founders in the audience, do you see anything that founders can do to help grow their ecosystem?
Yes, 100%. So, okay, I can hear. Okay, when VCs are not supposed to be just giving money, forget about the project, and then a week before TG, hey, how can I claim my tokens? What's the process like? And then a VC, a venture capital in the traditional way, or in the Web2 space, they are hands-on with the project. They're providing not just capital, but additional support. From our side, I would say, it depends a lot on the type of company, the stage they are. Sometimes, if they're pre-seed, they're just looking for connections to other VCs, which I'm more than happy to make. If they're a bit a later stage, they might need connections to exchanges or, different service providers. One of the ways that we help is, for example, hiring. We all know how tough it is to hire in Web3. I say this from a personal experience as well. So we try to help our portfolio companies with that, especially because we have, we spread out pretty much all over the world, especially in Asia. We can assist a lot on that side of things. But besides capital, of course, like Julia was saying, the founder needs to have a vision. The founder needs to know what they're doing, need to solve a problem. And of course, if maybe your idea is too early for now, it's not compatible with the market, adapt to the current situation and try to find better ways, as Julia was mentioning about virtuals. But other than that, having, how can I say, a way to properly onboard users and retain them is what I think is key. Of course, depends on the type of project you have. You might, have more like a B2B type of focus, but retaining your users is so important. We've seen all last year with all these like tap to earn games that they got millions of users, and then once the token got launched, they got trained to other projects and other tap to earn. So that's not necessarily so sustainable because you will not keep and retain those clients. So try to find ways, try to understand your community, try to understand what they need and want. I think one of the best examples right now in the market would be the Jupiter team. They launched last year. It's been over a year since their token got launched, and they continue building and getting their community engaged in order to get feedback about their product. Their founder, Meow, he's really active on social media as well, trying to get feedback from anyone that is messaging him. And they just did also an event in Istanbul to gather just the whole community. So I think those are good ways to have a more sustainable business. Again, the market is tough, narratives change, but you need to adapt accordingly. And of course, your user base would be your supporters throughout the bear market and of course bull market, so they get rewarded somehow. But yeah, I think those are my key points to talk about.
Great. And sort of the same question, Rifat, but from the exchange perspective, what are some of the best practices that you guys have uncovered to continue to grow the ecosystem, and how does that vary by regions?
Yeah, I'll touch upon the factors. I think to continue what Alessia mentioned, there's two factors. One is community, and two is transparency. On community, I think a lot of the projects underestimate the power of community. Community, when you're at an early development stage in your project, becomes your best marketing channel. It doesn't mean that you have a community that you just have an X number of followers. You need to have the engagement with that community. You need to understand the feedback that comes in from that community and you need to build on it. So once you're ready to be on an exchange, that community becomes in your best powering tool. And a lot of people underestimate that. I think the focus should be from founders early on how to build a successful community that you can harness and use for your project. The second piece is about transparency. And when I mean transparency is obviously share as much information as you can, but also transparency of the use case you're trying to solve. Some projects, definitely on all, would focus on the financial gain out of this. You should be focusing on the life use case of the project. What are you trying to fix? Or what are you trying to solve, and how does that become scale for your project going forward? I think these two things do get to sometimes be undermined, but they're, at least from my personal view, definitely key components for a path to success.
And a follow-up question to that, does OKX, do you help these projects, if there's a potential token listing, do you help guide them with the best practices to generate that sustainable community, and do you guide them on how they can be more transparent? Do you take an active role there?
I think a lot of it comes on the project itself. By the time they get to a point of OKX, a lot of these projects are developed. They know what they want to do. They've gone through some listing of some form. So as much as we can play a role, I think a lot of the role still remains on the projects themselves to develop and increase that community.
And how do you feel about companies choosing the right exchange to list on? Because there's some strategies around there. How do you feel about that? Is there a good strategy on where to launch your token to make sure that the token project grows in a sustainable way, or is it really whatever large exchange will list it? You go to the first one that approves the listing. How do you view that?
I think I can't comment on other exchanges, but what the founders should be looking at is how do I bring value to market? And if I'm confident I can bring value to market with a great community, with a great product, then that's what they should be talking to exchanges about. I think that's a key criteria of any valuations, to look at the project, look at it from all sides, but definitely community and use case is going to play a big part of that.
If I may tap in, I think what happens a lot with Web3 founders is that they think the TGE is the final point. No, it's the beginning of your work. That's when things will become even more difficult, because pre-TGE, pre-token, you can continue postponing, and the thing is that the job really starts after TGE. Of course, you can go into great exchanges that have lots of liquidity, like OKX, but at the end of the day, it's up to the project to maintain the community, maintain product development, and of course, the exchanges will also look into your project and see, are you still active? Are you being transparent? Because they will do those regular checkups. So you need to continue building. It's not, okay, I got listed on the top 3 biggest exchanges, I don't need to do anything else. No, the exchanges will ask you, and your community and your investors as well. So the job only starts after the TGE. So it's good to keep that in mind.
Got it. Juliet, question for you. So at Borderless, we focus on thematic funds, early stage thematic funds, and what we view as very important themes in the ecosystem. So decentralized physical infrastructure, DePIN, interoperability, things like that. You mentioned virtuals, so there's the AI intersection with blockchain narrative, there's DePIN. What do you see as the most sustainable sort of category right now? What are you excited about?
You know, then people ask me, what is our investment thesis right nowadays? I reply usually in a very simple manner, whatever makes sense. Because, see, as you mentioned, right, like you might have different vision and different investment strategy, but you should understand that your strategy makes sense at the current point, at the current market, right? Like, because DePIN, for example, you invest in DePIN because you should look at the endpoint. The endpoint why you're investing in DePIN, because you want to get the real tangible, let's say, use cases and the real mass adoption. And of course, DePIN is getting in the way, like interoperability the same, because you want the users to operate smoothly within the chain, right? That's why we're focused on that. Same as AI. For example, we discussed AI, like why we have AI here. It's like, what is this? If it's beneficial for the industry, in my opinion, it is, because firstly, it brings the insane amount of the capital injection into Web3 sector, because investors in AI, they're bigger than investors in Web3. And if there is a sustainable project that brings Web3 and decentralization as an extension and as an extension in a proper AI infrastructure, of course there will be and we see there is a bigger funding rounds in AI projects, in some infrastructure AI projects nowadays. That means that the capital is being injected in the industry we are in. That's number one. Number two, as we see, and not that many people think about it, it's a perfect way to educate people to operate within Web3 space. And AI agents serve exactly the same, right? Because I remember when we started long back ago, we had to learn everything by our own, by experience, all the exchanges. Now you can ask the agent, you can do some, Web3 search and understand what is the liquidity, what's there. So there are multiple helping tools for new investors and users to operate within the chain. It provides the overall very smooth user experience. So that is beneficial, of course. And of course, we are targeting consumer layer because we touched that point, institutional capital. Everyone have been discussing institutional capital for the last 3-4 years, if I remember, right? But it's not there. Why? Because there should be government security, regulations, because then institutions, they feel that's okay, because government recognizing they're secure, we can operate in a very legal framework. And then retail traction, because, assume I'm a bank. Why should I do something that doesn't bring me any a good value and good revenue, and it's not, proved, and it's got no traction, right? Once we have retail plugging in and we have a traction, then of course institutions will follow.
Same question to you, Rifat. How do you have any categories that you think are going to be the winners moving forward, or are you largely agnostic to what's being built?
I'd say definitely as an exchange, we should remain agnostic, but the categories that succeed are the ones that go back to my earlier point, that prove a use case. If you are, let's take tokenization. If you're tokenizing something, why are you tokenizing it? Does it cut out a middleman that's involved in the process? Can you do that better on chain? And if you do that, then obviously there'll be a lot of attraction to your project because you've solved something in your market. But if you're just saying, I'm going to tokenize an asset without a clear view of why you're tokenizing an asset, it's going to be tough to acquire more traction. So I think as much as you can be transparent about what you're doing, as much as you're continuous about it, like Alessia mentioned, it doesn't mean you reach one step that you stop. You need to continue communicating. And I think those are the ones, if they develop that criteria, will continue to succeed.
Got it. Alessia, do you have thoughts on categories moving forward?
It's tough to predict, for sure. But one of the areas that we really are liking so far is real-world assets, for sure. Especially when we're talking about institutions, right? These would be one of the ways that they could tackle the market. And, it would be a good way to look into further. But as everyone else said here on stage, we're also chain agnostic, vertical agnostic. At the end of the day, we are more of a, founder-driven company. So, yeah.
So you're chain agnostic. What are your views, and this would be an interesting question for everyone, but what are your views on the layer 1 ecosystem, layer 2 ecosystem? There's so many coming out, there's so many that exist. What's the future? Do we have a multi-chain future? Do we have a few that win? Or are we able to just continue churning out new infrastructure and with interoperability, that fragmentation goes away and we can operate like that? Got it.
You're doing a great job.
We could make it short, actually. So, for example, we have Ethereum, right? I remember there was an AdCon in Montenegro. It was the first major Ethereum conference. And Vitalik made it in a very a proper manner. He said Ethereum basically itself is a layer 1. It's for government. It's for enterprises. So it's the major building tool. And they were the first to make this. So there is I just told you can build the house, you can build it with bricks, panels, whatever. But Ethereum is the more secure, and of course it is good. That's why we see like US government is buying so much of Ethereum nowadays. But there are lots of other verticals that are uncovered. And then you build a chain, you need to understand what is the use case and who are the users, what are the practical use cases. So that's why I believe like Solana, they are focused on retail and they do it in a very proper manner because they want to cover all these retail market. So Sui doing good because there are also the verticals and the technology and the practical use cases they are focused on. So, and I believe overall, it's all about having the proper go-to-market strategy. We should have multi-chain future because one chain can't cover the whole market. If we are like making the same parallel to Web2, and you can see that there are like so many things we have, like application layer, like a search, whatever. It's like, but once you build a new chain or you're developing the new chain, you need to have the proper ecosystem growth strategy and go-to-market strategy. And if you do that successfully, you're good. And of course, the future is multi-chain.
Well, I think we're out of time.
I think you are, but
Yeah.
great panel. Well done.
Yeah, give it up for the panelists. Thank you.
Thank you.
And
you
thanks
so
for
much.
everyone to come to listen us right after lunch. It's amazing audience, so many people. Thank you.